Financial Reality Check, tak nazywa się blok tematyczny, który w tym momencie rozpoczynamy. Rozpoczynamy go od niezwykle ciekawie zapowiadającej się dyskusji panelowej. Co decyduje o sukcesie lub porażce kompetencji w zakresie skalowalności. Mam zaszczyt i przyjemność zaprosić na scenę uczestników dyskusji. Mr. Ahmad Piraiee, Co-Director Startup Green Warsaw. Welcome Ahmad. Mr. Manjit, Rana, Rainmaking Innovation. Welcome once again. Pan Tomasz Zastrzeżyński, co-founder grupy Ando i moderator dyskusji pan Tomasz, Danis, partner MCI Capital. Panowie, najbliższe 35 minut jest dla Was.
Hello everyone, my name is Tomasz, Danis, MCI Capital. I allow myself to speak in English since two of my noble guests and panelists are not very familiar with Polish, so I hope it will be easier this way to have this discussion. This is my cheat sheet, so I'll be looking from time to time on this one and talking notes. I know that lots of you comes from, let's say, traditional banking and insurance, and it can be a little bit off of your day-to-day scope, the discussion on ventures, startups, and so on. But we had an aspiration, or we have an aspiration to make it nevertheless attractive to you, speaking about opportunities, problems, some maybe some disagreements amongst the team on how to finance, where to go, what's good or bad for the companies, and where in all of that is the way to maybe integrate with your businesses. I think that the good starting point would be to have like general idea where the Fintech and Insurtech is going, what are the short-term trends, what's just around the corner. Maybe not fortune telling for the next 10 years, but something like, 1-2 years down the road, what will surprise us, in short.
So the kind of trends that we're seeing at the moment is, I think if you go back about 3-4 years, there were lots of insurtechs that were going to disrupt the traditional insurance companies. It's definitely very different to that now. Most insurtechs, and I only understand insurance, I don't understand banking. Most insurtechs are now supporting traditional insurers. They recognise the fact that their propositions are there to enhance insurers, not necessarily to disrupt. The valuations are crazy at the moment, especially in the US. If you're doing an insurtech, even quite a simple insurtech, you're able to raise quite a lot of money very easily. In Europe, we're not seeing that. It's harder for them to raise money in Europe, and as a result of that, what we see is a lot more sophisticated startups in Europe. But that's generally because if you don't raise money very quickly, you incubate longer. And while you're incubating, you generally tend to get stronger, more sophisticated, and that's the patterns that we're starting to see. So, if you look at Root in the US, 3.2 billion valuation, but they're basically just doing a pays per mile model. Over in Europe, we have far more sophisticated startups that are struggling to even raise £250,000. So there's definitely money out there. I think it's very unevenly distributed, but it's definitely a very fast-growing sector still.
If I can put it a little bit more to fintech part also. So there was this very interesting article in Financial Times also to somehow build a bridge, because you said the startups. That Financial Times basically said that most innovations in the fintech in this area is happening in the banking system rather than startups. So if you look at Blick is a fintech idea made by banks, not by startups. So maybe it's not also that much related to that. Or even fun fact, like right now they say the most interesting startup in Poland, like with the growth and everything right now, might be Piraiee. But Piraiee comes from venture capital, so it's kind of a byproduct of a recruitment company that basically tried to be more tech-oriented. So I would say if right now I'm not gonna, you ask me for disagreement, I'm gonna give you disagreement. That if this conversation is not interesting for anyone, let's just try to have a 2-minute conversation after this is gonna be over, because a corporation knows exactly how things should be done. They are very good at like algorithm and like long-term thinking and startups. A lot of times they are too emotional with it. So if they can somehow try to venture out and have a little bit of their ideas and their big strategy into disrupting themselves and adding a tech there, what happened in Piraiee and calling themselves as startups, and right now they basically show themselves as like the biggest startups in Poland, can happen to any one of those corporations. It's not that easy to get recognition by being a corporation, but startups can give you visibility, and hopefully you're also going to be the next party and not going to be a Kodak.
I think that we have now a very interesting time for the startup, and the future also will be very interesting, because now it's big. Every week we're hearing about big investment in startups, and the biggest one, and most of them are not profitable. They building scale up, and receive the new investment runs. And ahead us, I think everyone is prognosed that there will be some kind of crisis, and that the investment funds also will care about the money more than now. And we'll see how many of these startups of this fintechs will survive without new cash. I think that the biggest, or the ones in which the big players like bank, insurance company believe they will make some kind of acquisition and implement to their business. But I prognose that in a few years, few of them will.
So we heard that there's very uneven distribution of the money that floods to both Fintech and Insurtech, US versus rest of the world, or at least versus Central Europe and Poland. And we make it local. Maybe that's an opportunity for you as the companies that can invest in quite sophisticated model relatively easily, and basically be huge beneficiaries of that, rather than having to spend hundreds of millions, or if not billions of dollars to have something acquired from US. But if that's such a big problem of getting financing, so then where to go? So we want to make it local discussion. Where to go in Poland for financing your own business idea, be it fintech, being Insurtech.
In which stage?
I mean, let's say early stage, meaning beyond or at the verge of commercialization of the business. So I'm not saying maybe super early and you just have like MVP, like some working solution, not sure if it will be adopted, but something that you think it might be, the need is there, but you don't know if you know how to scale it up, and you really need funding. I would ask actually Timon first, because I know your path was quite different from the typical thinking of today's entrepreneurs.
Yeah, I think that our company, because we are some kind of garage company, when we start in two with my business partner, and then grow. Now it's about 100 people on the board. So we choose the easiest way, and maybe only one possible way to finance our business from the profits. So start build the business model who giving you revenue and profit from the beginning.
But I know you spoke to VC, like guys like me. Why you didn't agree? I mean, what did they do to you that you didn't want their money? I mean,
equity.
I mean, like nice people like us, and you didn't want cash from, not specifically me, but some other.
Yeah, because no one give you money for free. Yeah.
I mean, beside the PFR.
So it is the reason. Of course, in our road we are talk with I think every model, like financing model which you have. So it's the investment funds coming, then some broker who want to issue the bonds or put us on the stock exchange. Also, some our global competitors want to make some acquisition. But of course, if you want to save company, it's everything about price. Yeah, some.
Sometimes about the cash, either you have it or you die.
Yeah, but
So you have cash.
we have cash, yeah. We have profits and we scale up and financing our growth with our own profits. Of course, maybe someone can think that easier or faster will be to receive some money from investment fund, but I think that the biggest strength is our flexibility. And if you receive some investors, then you lose some of your flexibility because you have to agree with them. No one give you cash without having some secure or some influence on your business. So it's a road. We are not close for financing, but I think that our growth, the reason our growth is also that we have some independence to take decision and to grow on every market where we are.
So I know two other gentlemen finance their businesses with external money. So I don't know, like if you can give maybe some perspective of the ones that actually took the money and whether it was a good decision, bad, and where to look for it, specifically in Polish situation.
Yes, before I answer that question, I think one of the things that kind of surprises me a little bit is, so I did my first startup at 19. In my work experience here at university, there just wasn't the option to go and get this kind of money. So I had to get a small bank loan and grow the business, but it was really important we became profitable very, very quickly, because otherwise my business would have collapsed. And I think that's a big change that I see today. So now when you get money, it's not about turning the investment into a profitable business. Generally, when I see startups getting money, what they're incentivized is they're told, if you go get 3 POCs, we'll release another $2 million. And no point is a conversation about make yourself a profitable business, which I find very strange. It's kind of going back to the .com times where people were being given crazy amounts of money with crazy valuations, and you're right, at some point that's going to collapse. That has to collapse, it just doesn't make financial sense. In all of the startups I've done, I've never taken external money, I'll be honest. I've always used one startup and the profits from that to go fund another startup. I have lost money as well, but that's my decision. But because I don't like the idea of having somebody else tell me how I should be running my business. So the big thing for me is even if we're giving startups this kind of crazy money, at least let's use that money to try and make them a profitable business, not just give them targets that just help move them up and make them go get extra money. In terms of how do we get money in Poland, I don't operate in Poland, I don't know, but I can give you a parallel for what we did in the UK. So in the UK, 3-4 years ago, most of that money was coming from private investors because we have a good tax benefit for people that want to invest in startups. And so you'd get 4 or 5 people that are prepared to throw £50,000 in, and then the idea is that gets you past a seed round, and then you hopefully go get to more serious investors that will go and give you that Series A type stuff. That's evolved in the UK now, where a lot of the money for the Series A companies typically comes from industry. It doesn't really come from external VC type businesses. So insurance companies have realised that what they need to do is they need to get more involved, and they need to invest a reasonable amount of money in several startups, because it also helps them learn as well. Because if you've got money in a startup, you're going to get to see exactly what they're doing. So we're starting to see a lot more of that, and then we've now developed an ecosystem where you can go raise 5 million, 8 million pounds plus in the UK for a Series B or a Series A even, but that definitely wasn't the case 2-3 years ago. So it has evolved, but I would say a lot of the money is still coming from the industry players because they've realised that they need to invest themselves to understand what's going on.
Can be a little bit more local. So the first thing I really feel we have to categorize things. There are some businesses that they really have a very low barrier of entry. I totally agree. The main source of income have to be clients. So you basically just show that you have traction, and then based on the traction, you can have more traction. And that can really have a snowball effect, and then you can just try to expand your business. But there are also some aspects of the businesses that they have very high barrier of entry. That might also be very good, because if you have a very low barrier of entry, meaning that anybody else can also enter, so like a blue ocean, red ocean strategy in that kind of a context. So you cannot really generalize where is the best place to do it. I say to a lot of people, they don't even really play with the word startup. Because when you just say that you want to create a platform, software as a service in order to bring 4 people together, and then they're gonna have dinner together, and then when it's gonna be 1 million people, then I'm gonna be a billionaire. First, really go and bring 5 people in your room, and then try to see if this really works. Then bring 10, and then 50. By the time that is 500, say, I can't do it anymore, I need your financing. But don't say that I've never done it, I just have a piece of paper and I want to do that. But when somebody says that I'm going to have the next generation of AI that is going to revolutionize the legal sector, I cannot say that, oh, I've already tried it, it's over, so now if you just don't mind, buy my product. It's a very long-term process and really needs a lot of investment. But also going back to the other part of that regarding the venture capital. Venture capital is, you're an expert, so you can say it right or not, but it's more about the hot potato game. Is that I have it and I have to pass it to the next person. So it's more about the valuation than the current money that is being generated from it. Perfect case of that would be the WeWork. And they didn't really take a look at how much money it generates. They would take a look at how much with the statistics and valuation you can try to put higher valuation on it. Because the higher valuation, you can try to have a better exit on that. That an exit basically has nothing to do. You can start a company, finish a company, don't make anything out of it. But because of an exit or because of an IPO, you can make millions of dollars on whatever the currency that you have out of that. But also try to just say a little bit about what to do in Poland. Is there a startup that really wants to do fundraising here? Yeah, that's what I'm thinking. I'm gonna want to give a recommendation. I don't think there's anybody else here who want to really use it. But for that case, I totally recommend right now just really going to the PFR and other places that they try to have it. Not because this is the perfect thing, because the options that they provide for startups are uncomparable to the private sector. Because the amount of the equity that they ask from a startup and all the the conditions that comes with it, it's really hard for a private person to put their hand in the pocket and just come back with that level of generosity.
So luckily, I'm in a moderation seat, so I don't have to disagree with all of you, representing venture capital, and it would be making me hypocrite if I didn't say, it makes a lot of value to come at some point to VC money. But also a question to the general public. Are there any representatives of financial institutions, both including insurance as well, that have integrated some external company that, let's say, could be called a startup or something like that in their, let's say, larger operations? Like anybody in the room? I see 2 people shyly raising a little bit the hands, not sure. So not a lot. And I think one important phrase came here about the hot potato. Actually, I think in Poland or even in Central Europe, it's much less of the hot potato game because there's not so many next stage or next round investors. So when you take this hot potato, you better have a deep enough pocket to finance it over time to bring it to some, I would say, at least profitability or at least break even that you can then decide where to go. But then there are also, other ways of doing it. So from your experience, and I know you have this different opinions, any things like crowdfunding, like acceleration, relatively easy in the process investment of the strategic player, is it the way to go, or you would disqualify some of them as a rule of thumb? And also, I know some of you might not be super familiar with Poland, but the ones that do, you know, try to put it in.
Can I just give a very short political answer and then the answer? It depends. Because that should always be the answer. If anybody answers that, definitely that's right. It's like you go to the doctor and it was like, if I have a disease that is not also for me, it's for a friend of mine, what that friend is going to take. And it was like, you have to really sit down and talk to a venture capitalist to tell you where to go.
Let's make it easier then. So there's like a huge danger that if there's like a strategic player investing early in the company, that kills the independence, that kills the upside, that basically they focus on takeover of the company relatively early because they think if it's good enough, they can integrate, not to grow it to the larger size and value. What do you think about that? And there are representatives of such businesses that might be interested in taking over.
Well, I can comment on kind of how the industry helped kind of develop some of that ecosystem in London particularly, and obviously it's replicated around the world now. So even 4 years ago, 4 or 5 years ago, startups were just not able to attract money. The ideas were too embryonic, and so the accelerator programs then developed whereby typically 10 corporates, so it could be 10 insurance companies, 10 banks, 10 fashion companies, would collaborate together, put a certain amount of money in, we create a pot, we then go find the 10 or 12 most interesting startups and we incubate them. So in 3 months we would typically get them from idea to being market ready and investor ready. But the reason that the corporate partners did that is because they didn't have a clue who to invest in. And so this was a way of kind of them edging their bets. They share the 100,000 investment across 10 or 12 different startups. They learn from them, the industry learns, and they take a small equity in those startups. On average, our startups that go through one of our programs, we have 29 of them around the world, they typically raise $2.3 million when they come out of the program. But there are startups that literally 4 months after coming out of a program, they've raised $5-8 million. But the reason they're able to raise that kind of money is because they've had some very professional help from seasoned entrepreneurs. And so the investment funds are not investing in that team, they're investing in the support network that was sat behind them. And so that definitely has helped move the UK system on quite dramatically. I mean, to give you an idea, we have had about 850 startups go through our programs. We take a small equity stake in them as well, so we have a vested interest. Our portfolio is worth about $1.8 billion. So by just taking a little piece of equity, I mean, that's pretty good, and that helps keep us motivated to make sure these guys succeed and get those next rounds of money. But we are reliant on having this scenario. We've got to be able to pass them on to somebody who wants to invest bigger money into them. And I don't know how much of that type of infrastructure or platform you have in Poland, but a lot of countries are replicating that at the moment.
Yeah, I think that is also depends on what is your target, to do. If you want to scale up business and sell it to someone else, it's the investment funds are best for it, because they know how to build how the startups should look like to be good asset for another investment funds. If you want to only scale and be on the market and have some good background and big player, find someone from your ecosystem who is bigger and can give you some added value. Also smart money like business angel or small venture capital who can help you with connection, with some extra money and some advice. If you have profitable business and want to take dividends, so no one give you, and then you shouldn't be looking for investment. So it depends what kind of business you have. If you need acquisition, if you need extra money to scale up, or what is your target in 2 years to do this business.
So I hear.
I was just going to comment on something. I think the big difference, mindset change, is if you go back 10, 15 years, somebody doing a startup would tip what kind of business would that have been? That would have been a small fashion shop or a grocery store, a Chinese takeaway or something. They didn't call themselves a startup. They just said, oh, I'm going to open a Chinese takeaway, right? They weren't going out trying to raise money and increase the valuation. They just got enough money, typically from the bank, to get themselves operational. They didn't really pivot, because if you set up a Chinese takeaway and it doesn't work, you don't suddenly flip it into a hotel. You had to make that business work. And I think the difference we see now with this the type of startups that we have now, because they're tech-based, they're generally not trying to become a profitable business. There's some exceptions, but most of them are not trying to become a profitable business. What they're trying to do is increase their valuation to raise that next round of money. So they constantly seem to be chasing money, not chasing building a business. And for me, that kind of seems like a very short-term strategy. But which is kind of why I think there's a problem that we're heading for.
Let's have a bit of structure and argument here at the same time. So I understand Manjit is proposing or promoting heavily the acceleration platform, basically supporting lots of businesses through early days, and then they're ready for bigger financing. Here we have the idea of self-entrepreneur that basically runs on his own and then being very, let's say, selfish in a good way, depending on what are the needs, whether to go on your own or just let someone in for a little stake, etc. At the same time, I would say let's not forget where we are with it. Let's not fight against the reality, because where are all these largest fintechs? Actually, they were, or they still are not profitable. So, and to question maybe starting with Ahmad, so what is the secret sauce of the largest guys? Because I know ideally everyone got to profitability after first financing, but in the end, all these big guys that we're using now, or talking about, from Revolut through WeFox, through TransferWise, through PayPals of the world in the past, or Square, or whoever else, they were all losing money like crazy and still losing money greatly, most of them. And still, maybe in the tradition of hot potato that someone else is taking over, but in the end, they have a chance also to be the largest and then be acquired by typical, or let's say more traditional businesses with billions of dollars in valuation. So what's the secret sauce of the ones that actually in this, we argue if it's not a pathological situation, but it is what it is, did the best?
I would say maybe I can just put my maybe psychological part of that right now, the other hand. You cannot create a need. You have to just find the need and then provide something that will satisfy that. There's a huge problem with entrepreneurs, and that is this gut delusion of some sort. They feel like they're gods. So there's what, everybody uses taxi, but everybody makes mistake. I know what to do. And that's stupid, that's wrong, but that means Uber. So I'm just saying, sometimes going totally against the trends, you create a need that right now you really feel like, okay, so even if I'm right now a taxi company, maybe I can try to just pretend to be an Uber. That's a massive mind change, like a change of the perspective. To say you can try to tell people that you did have a need, nobody was providing it to you. And now that I give it to you, now you really feel like a part of my life really needs that. So a lot of companies are having a mistake, meaning that they don't know the Insurtech, they don't know the Fintech, they really feel like you definitely need that. Like one of the startups I was working with them, they were trying to have a unified database for insurances in order to put all of their claims there, because the claims are very much discrete. Like you have one place and then you have to put it in the system, put it out of the system, put it in the system. But what they were seeing as an obstacle is that if the claims is going to be very interesting, is going to be like a game, then the insurance that would receive 2 claims per day would receive 200, because now it's easier. So when something is not really there, you don't really have to feel like everybody makes a mistake. Maybe this shouldn't be there. Again, going back to a little bit of more of a local market, some brands like Piraiee, they didn't really have to push it. Once they put the brands out, Everybody loved it so much that they were talking to their friends that, hey, you definitely have to use it. That's why Piraiee right now is in the US, and they are like, oh, like they're Series B, Series C, and they're doing all of these things. And again, they're a Polish startup. Just also try to make sure that we know where we are, and then try to also not to bore the audience. If you have a corporation and you don't have a CVC, from my point of view, it's like you don't have a phone. Don't ask me who is going to call you right now. You don't have a phone. That's why nobody calls you. But the moment you do have a phone number, I promise you that you cannot leave your home without a phone. Right now, look at M Accelerator and look at the product success that they have with MAC. It's just a tiny little thing. The amount of the money, like 100 million euro, I'm sure for many of you guys, it's not that much money. But the moment you put it, don't even call it a startup. One person would knock on the door with innovation and will come with you. And a guy like MCI can co-invest with you. They put their challenges that, like they have for years with you, because your money and their money together can even just be better. And then you are going to have the innovation. Just don't even call this startups, by all the things that we're talking about. So I really hope there will be no lines in the sand that we just say like we're a part of the startup ecosystem and you're from the corporations. I don't even like the word tradition in that context. Because if you really look at the PZU, if PZU right now put their sponsorship out of the Fintech part, the Insurtech part of Poland, they collapse. If you put Ahmad out of the MedTech part of Poland, it collapses. So I'm just saying they call these people traditional, but still a little bit of money for them means a whole life for the startup ecosystem. And if this friendship is going to be better, if hopefully, I'm going to make a joke because I'm a foreigner who lives in Poland for like 7-8 years. A lot of foreigners who come to Poland, they say, oh, Poles having that problem. And I was like, the moment you call them Poles and you call yourself another person, you draw a line between yourselves so they would never feel comfortable with you. But the moment you say, we have a problem, then they feel like, okay, so maybe I'm a little bit different than this guy, but he feels like he's a part of my life, so let me talk to him. So the moment we forget about our differences and really talk with each other as if like we are part of the same, I know we're different, but we have a lot in common because we both want to make money, hopefully, then that will be hopefully a point that we're not going to see ourselves as two sides of the coin.
So now we know what to do with the piece of advice to our audience. Get your corporate venture capitals and then basically look around and maybe someone calls you with a great innovation, basically, enhancing your business, not necessarily substituting it or killing. Since we have 2 minutes left, I have this question at the very end. It was always, we also invested in one of the Insurtech companies, and always bothers me one thing. Why insurance companies are so slow on that? I'm not very naive on that, but I wanted to basically, to have it out loud. Why are they so slow in getting innovation, in getting more of this innovation to their customers, to basically, to get maybe better product, maybe better backend, not even something that it's customer facing. I know it can jeopardize their current business. Why so slow in Insurtech?
So as you mentioned about insurance, that kind of gives me the license to answer.
I was looking at you because I know it's you.
So the big problem is, I think one of the speakers mentioned earlier, it's a mindset problem. And it's also what people are measured on as well. So generally, sorry, I disagree with the fact that you can't create a need. I think you absolutely can create a need, but most businesses are set up through frustration. People being frustrated with a problem or a service they're getting, and they want to make a difference. And if you look at most successful startups, that's where they came from. They tried to solve a problem that was really bugging the hell out of them. In a large corporate, there isn't really that need, because I get paid, I work for a large corporate, I get paid my salary. Why do I care? Something may irritate me, I'm not really that bothered. I'll give you a good example. When I was at AXA, I went to the head of travel, and I said to him, how many cancelled holidays do we have? He went, I don't know. I said, you're head of travel, how do you not know that answer? It took him 3 days, he came back, said, I can't tell you my portfolio, but with one bank, we have 10,000 cancelled holidays a year. I went, great, what's the average value? He looked at me and I went, forget it, let's guess, it's £1,000. Okay, 10,000 cancelled holidays, £1,000 a holiday, what do we do with them? He said, we just pay them. I went, okay, but what do we do with the flights and the hotel rooms and the transportation that we now legally own because we've just paid for them? And he went, nothing, they don't exist. because they've been cancelled. No, they do exist till next Tuesday. The flights exist. By the way, we own them. And he went, well, doesn't matter. And I said to him, if that was a startup, the first thing I would do is, I know I'm going to get cancelled holidays. What on earth do I do with those assets? Now I would try and resell the flights. I would try and resell the hotels. And that, so it's a mindset.
But then what's your solution to change the mindset of people being in large corporations? I mean, like,
if they don't, you're going to get a Telefonica that will come along and create a travel business where they can resell.
Manjit, but how?
Sorry?
How? You get startup consultants to do the, I don't know.
You could do that. We make a lot of money out of doing that.
Can I quote somebody else in that? They say, if you don't destroy your own industry, your industry is going to destroy you. That's it. Kodak used to be the amazing player, and they were very comfortable. And they even did the digital cameras. They just didn't think that this is going to be the mainstream. So talk to Samsung and then say that the Samsung spare part company, right now they're eating them in everything, that they were the best one day. So the fact that right now you have a good margin and everything is fine, it doesn't mean that in 10, 20 years you're going to be like that.
Right. So yeah, I have also one comment. Even as a moderator, there's like one great manager from, let's say, Western Europe, coming also to Poland saying, I just assume my company is dead in their model today. So that's what I do. I try to extend the life of the company, assuming that all these traditional lines of business will be dead in 10 years and what to substitute it with. So thank you so much for the attendance. I think we had some of the view that maybe VC money is not that good, maybe the acceleration is a good idea at the beginning, that you need to really look at the profitability, but at the same time, I think it's a request from the whole startup community to you, and I think investment community as well, to be open for this, let's say, innovation, let's not call it startups, for the innovations that you can bring to your businesses, and just reach out, and then it might greatly enhance your business. Also with some, great new things to do, maybe more exciting. Thank you so much.
Ahmad, Manjit, Timon and Tomasz, thank you very much. Szanowni Państwo, pozostajemy w tematyce Financial Reality Check. Przed nami debata 1+1 na temat, jak zdobywać się do finansowania. Zapraszam jej uczestników, pani Anna Strażyńska, MC2,